Ethereum technical analysis, and I'm sure you're glad you tuned into the videos recently and saw that really overall in yesterday's price action saw us going back up into fake out territory yet again, come back down and went down as far as $124 and is once again inside this triangle area here. I didn't adjust this or anything like that. If you've been following along with the series, you know that this is drawn on here for quite some time now. So really this speaks for itself for folk who know about sort of triangles and all the rest of it. If you don't, well, this is a ascending triangle. They have somewhat of a chance of breaking towards the upside. But I don't really like thinking about them that way, especially not in Bitcoin land where it always seems to be 50-50. You can take stupid measured moves off them, but I always call them stupid measured moves because it's a great way of sort of proactively being stupid if you want to be. But if you were to say break out of it around about there, it was line up really, really nicely with this horizontal blue line that we already had in here in around $101 should it break to the downside. But of course, if you're to not be greedy about things at all or whatever, then you could be looking at coming down here to 120, and in fact 120 all the way down there would be our sort of considered fake out territory on this side of things, where you could easily see the prices going there to around about where we've seen support in the past and around there, and then bouncing back up the way, and that sort of thing can happen. And if you were to take this and look towards the upside, again being greedy, then you look up as high as 170 and all the rest of it. But you've got the 382 Fibonacci retracement point up here at the 162 level, and of course that's that would be the first profit taking target there towards that side if you were just looking at this Fibonacci retracement. But it's worth bearing in mind that the 236 is right there in the middle of it, and that's going to offer up some sort of resistance anyway at 150. Just the fact that it's $150 alone is enough for that psychologically. So that's kind of what we're looking at overall. This hasn't broken out quite yet. I've been prophesizing quite heavily over the period of the last month probably, or whatever, I don't know, since the last couple of weeks, sorry, about the idea of just trading within the range and how you get sort of more or less fairly easy moves there of up to 10%, which you could be taking without, and I'm not a financial advisor, no, that's financial advice, but of course without with manageable risk targets in mind, and it makes your life a hell of a lot easier to be thinking in terms of that than it is to be trying to sort of build up some position in advance of a breakout happening one way or the other, and thinking to yourself, well, there's a 60 or 70% chance that will break to the upside, and here's your measured move off of it and everything else, and trying to just spend all this time focusing on some move that might get you as high as 25% when on a daily basis you're getting 10% or whatever anyhow, and that in the meantime. But just to be really cautious as of course in and around these areas, like I say, fake out territory, people taking longs up in this area are looking for how much, like maybe 5% or something like that gain, when in fact we've seen that you'd be stopping out again probably in and around that line there, having already lost 3 or 4% or something like that, if that was the case. And of course, if you're taking shorts in around this area, it's somewhat difficult to manage your risk in the sense that if you were taking a short from that line, then you're looking at a potential increase of 6%, or whatever before it comes back down. So I'm not like advising anybody to do that, but you can look at the price action, of course, and see the prices coming up here to 146, then later on see it back at 143, then later on see it at 139, then maybe you could then take a manageable one that way around. And for instance, if that's how you felt like doing it, and everything else in between is your discretion as a trader, and then you'd be looking at 7.5% if you only went down as far as that. But if you had have then sort of said that you would sort of just see how it went, just in case, and kept some there, you could have got a full 10% move, for instance, whatever. So that's really what we're looking at. And in terms of the oscillators and all the rest of it, no point over analyzing things. We're consolidating, so we're not going to get any divergence from them, and I don't really like using them for anything else. We can look at how we're potentially touching off the EMA here on the RSI, and that's interesting. Will we find support here on this and then make an upward move? Sure, maybe, but like we've kind of discussed that, I think, in terms of this outline here that we have. And then we're up here above the 50 level on the stochastics. That's great. The trend hasn't turned around here, whatever, that's all good jazz. But I'm going to take this measuring stick off here. I think it serves us not really that much of a purpose, really. We can revisit it in the future. And if this were to be correct in the sense that I've used the bodies rather than the wicks, then of course we're coming towards the sort of the breakout area for this. Of course, so more caution and everything else. But we could be more positive about the price in general, just ignoring this triangle when we look towards the 236 Fibonacci retracement in there at 132, 133, whatever. You know, you want to be breaking up above that there if you're going to be looking towards, you know, the next sort of level after that. That's 139, and then of course you've got your fake out territory, but it really depends how things goes 24-hour chart if that's correct, you know. But you know, we could easily be looking at this again in a wee while and saying, well, isn't maybe this is more accurate, because there's more time there for it to you know, to fill out that space, and then there you go, fake out territory again. And that's kind of partly the reason why you have all this sort of volatility in around those extreme areas. So beware of those targets. And what will I do? I'll just stick it in a sort of rough compromise position for now at the end of this video, and we'll pick it up again tomorrow. Thanks very much for tuning in. Thanks to everybody who's liked, comment, subscribed. It's amazing to have over 300 subscribers on the channel. So you guys are the best, guys and girls, all of yous, and everyone who leaves a comment and all the rest of it, I do try to read them and everything else. So thanks very much for doing that. And also I'd appreciate it if anybody shared the video, you know, with their friends and stuff, or on Facebook in a group, like, you know, if you're in a Ethereum trader group or whatever, and stuff like that, because I do those things from time to time, but when you do it yourself, it's awfully spammy. So whatever. Alright, thanks very much for tuning in. I'll see you in the next episode.